So we have a look at a review of the markets where it finished off on Wednesday. But let's bring in Robert Omotunde to look at the markets. Good morning to you, Robert. Thank you so much for joining me on the program.
Good morning, Harry.
It's great to have you back from your holiday. You're looking very good, but unfortunately the markets did not go on holiday. It's been boiling for most of the week. You take a look at the numbers from the equities market. Of course, it's been in South Territory since the beginning of the week. We're seeing a topsy-turvy movement in treasury bills and, of course, the bonds market, and not forgetting the equities market. So while the currencies market seems to be smiling, the other segments of the market are not doing too good. But what do you make of what's actually going on?
Well, it's a reaction to the general law in economic activities in the country. And as you rightly noted, what you experience in the market is partly traced to weak sentiment as it relates to the different issues that the market is currently facing. Of course, market has been on a 3 consecutive day losing mood, and for where equities are now, it's appearing like a lot of investors are trying to be cautious in taking position. Perhaps what we will see as a major trigger for a rebound, a temporary rebound in the market, will be earnings surprises from third quarter releases. The banks are taking the lead in that regard. Of course, we saw UBA result coming in quite impressively last week, and this week has been GTB yesterday posting an impressive performance in terms of their gross earnings return. Gross earnings was up by about 43.6%, also compared to what they did in terms of profit before tax, which was about 53.0%. So clearly, Guaranty Trust Bank is taking the lead in terms of surprising the market with earnings. And of course, in terms of key banking ratios, they still maintain their leadership position. ROE was impressively trailing for a 1-year period. It's currently at 31.8%. That's quite impressive. Cost of risk has moderated, is currently at 3.8%. Of course, cost to income ratio has also improved at 28.5%. So by and large, of course, we note the fact that for Guaranty Trust Bank, what was really responsible for the impressive performance was about 93 billion naira they made in terms of foreign currency gains, foreign currency translation, which is stemming from the fact that the company has quite a sizable percentage of their total assets in foreign currency. So for the market generally, it's more like investors want to be cautious. There are no exciting news in the market to excite the market. Perhaps the banking stocks will be the ones to give markets the leap that we'll see coming days.
But Robert, in spite of the impressive results coming in from Guaranty Trust Bank, we still saw that investors kind of took a cautious stance towards trading that particular equity. We didn't see it doing so much or contributing to the banking index gain. Yesterday, we saw the banking index dropping about 0.12%. Are you concerned about how investors are favoring banking stocks, these days?
Well, the result came in quite late yesterday, but maybe market investors were not able to digest the impact of the result. I think the result came in after market had closed yesterday. So today we are expecting that investors will react to that impressive performance today. But again, for the general banking industry, we are hoping that investors will begin to consider some surprises that may come in as a result of this result. Remember, in the Tier 1 space, 2 banks have released their results so far, UBA and Guaranty Trust Bank, and the results have been quite impressive. Perhaps we may see some position taken in some Tier 1 banking stocks, particularly the likes of Access and Zenith Bank, as investors may perhaps think that there will be a ripple, that there will be some form of positive sentiment towards those stocks in light of what the first 2 banks have done. But on the tier two space, we are not so bullish in terms of what their performance will look like. Remember that the tier one banks are still taking the lead in that category. So, but we think that today we'll see some improvement in the banking index on the back of the positive results released by Guarantee Trust Bank.
I'm sure you're also expecting an improvement as well in the interbank money markets of expected over 130 billion naira will be paid into the banking system today. So that should improve liquidity. We already saw that from yesterday, overnight dropping over 20% after it hit near 150% on Tuesday. Talk to us about this. How do you expect this to actually shape the market?
Well, of course, the liquidity dynamics will continue to determine how investors take position within the fixed income space. Yes, from the auction that was carried out yesterday, we've seen the rush towards short-term securities, and of course, the maturity that will be hitting the system today, is an additional inflow into the system, which we have some more impact on the short-term investment securities. The treasury bills and the other money market instruments in the market. So, but generally speaking, the fixed income market is still what investors consider as a safer, like a safe haven for them in this particular time when we are experiencing a lot of negative sentiment within the equity space. Yields on 0 to 2 time to maturity on the bond side is currently at 19.1%, which is similar to what you would get, from the treasury bills or the money market end of the market when you take position in OMO or in treasury bills. Although on the 2 to 19 time to maturity, we still see yields at about 15% on the average. But generally speaking, investors still find fixed income investment much more attractive to them, in this current phase that financial market is going through.
Thank you so much, Robert, for joining me on the program this morning and, of course, sharing your perspectives with us with regards to what happened at the midweek trade. Business Morning continues in just a moment. Join us again.